Money does not grow by chance. It grows through smart capital movement. The capital cycle is how money flows from investment to profit and back again. Every successful business understands how to keep capital moving efficiently. Idle money loses value, but active money creates opportunities. The first step in the capital cycle is investing money into productive assets. These assets can be products, services, skills, or systems. Once invested, capital begins generating value through operations. Sales convert that value into cash flow. Cash flow is the lifeblood that keeps the business alive. Part of the profit must always return to the business. Reinvesting strengthens growth and expands capacity. Smart reinvestment reduces risk over time. The faster the cycle, the higher the earning potential. Efficiency in the capital cycle increases long-term profitability. Controlling costs protects the cycle from breakdown. Poor management can stop the flow of capital completely. Successful entrepreneurs monitor their capital cycle constantly. Growth comes from repetition, not from one-time success. Mastering the capital cycle turns income into wealth. When capital moves wisely, profit becomes predictable.